This is James Hierchik with today's Auto Chartist Stocks to Watch for Wednesday, April 4th, 2012. Alcoa Inc., stock symbol AA, finished the trading day with an inside range, which typically indicates impending volatility. The two previous candlesticks, up from the recent bottom near 973, help form the support line of this emerging triangle chart pattern. This is giving Alcoa a slight upward bias, supporting a possible move into the downtrending resistance line over the near term. This setup is the reason why Alcoa stock is a stock to watch today. According to the quality indicators, the overall quality of this emerging chart pattern is a solid 8 bars. The initial trend, which measures the strength of the trend prior to the chart pattern's formation, is rated the maximum 10 bars. The initial trend is also down while the projected move is up, and this is the reason why this trend change is considered to be a reversal move. The triangle chart pattern, according to stock market technical analysis theory, is a non-trending pattern. You can see that the market had a sideways move here, although the ranges were wide. It's basically a non-trending pattern as opposed to something here in the beginning which showed a clear trend. The gradual narrowing of the support and resistance lines indicates impending volatility. This, along with rising volume, should generate the momentum the stock needs to reach this upside objective. Although emerging patterns tend to be attractive to swing traders who like to buy support, sell resistance, and buy support and continue in this motion, the triangle chart pattern tends to be more attractive to momentum traders. You can see that as the market gradually narrows, the distance between support and resistance also narrows, and you get a very limited upside or downside potential. So traders revert back to breakout trading, and this is a characteristic of the triangle chart pattern. So it's more attractive to momentum traders who desire to trade the breakouts. Before Alcoa can even threaten to break out, it must first overcome a minor resistance point, which comes in at about the 1023 to 1035 area. It's a retracement of this top to this bottom. So inside here is considered a normal retracement zone that basic technical analysis is used to identify. If this can be accomplished, the market can take out this retracement zone, then upside momentum may drive the market into the resistance. A failure to go through this retracement zone may mean the market's going to turn back down, and in this case it would become a continuation pattern because it would be in continuation of this trend. So this is a very critical area, this 1023 to 1035. Again, if it breaks through it, it's likely going to test resistance. If it fails in here, it's likely to revert back to the initial trend and challenge the downside. Another stock to watch on Wednesday is Walmart stores. Okay, this stock is stock symbol WMT. This stock is forming a head and shoulders chart pattern. Here's a shoulder, here's the head, and here's the other shoulder. This is also considered an emerging chart pattern. A head and shoulders pattern is potentially bearish and is always pointing to the downside. Okay, you can see this arrow here from this trading zone here all the way down to here. So this chart indicates there is plenty of room to the downside if this market performs as anticipated. And according to the principles of technical analysis of stock trends, based on the recent rally from 58.05 up to 61.48, expectations are for a minimum correction back to at least 59.76 to 59.36. Okay, so short-term traders can see that this zone has to be tested because markets do make 50% in Fibonacci corrections before resuming their main trend. So again, watch this particular zone, 59.76 to 59.36. A break through this zone will put the market on path to reach the Auto Chartist target support line near the 57.86 area. One key to how this market's going to move is this 60.25 price. Based on the swing chart analysis, if we break through this price, we're likely to see an acceleration to the downside. This is a price or pattern where traders tend to want to try to hide stops, but it also represents a change in trend on the daily chart. So watch the 60.25 area again for an acceleration to the downside. If we do get it, likely to see a follow through to the downside. Now once the market reaches the support area at 57.88, it could bounce back up. However, a break through this price will also take out what they call the neckline of the head and shoulders pattern, and that could produce even further downside movement. This has been James Hiertech with today's Auto Chartist Stocks to Watch for Wednesday, April 4th.